In Stacking Up today, Tom White of TD Ameritrade joins me now for a look at a couple of trades, and always great to have Tom on the show. You know, you have a lot of viewers on our Facebook page, by the way. You're the winner.
It's all family.
Okay.
Yeah.
All right. Some checks are going out later, I'm sure.
Yeah.
Let's start with Lululemon. Earnings coming out today. What do you think about this stock?
Yeah, it's seen a pretty good run up lately. The overall sector has been hurt a little bit. Nike, Under Armour. But optimism by investors has been pretty high. We've seen a lot of call buyers in there. Anything that's at the money or out of the money on the current share price, with expectations that they're going to beat on earnings. But what I'm seeing is a lot of the put flow is starting to pick up as they're getting back towards near all-time highs. And what that's telling me is I think they're running it up. They're going to buy the rumor and sell the news on this type of stock,
okay.
where takeover expectations are relatively low right now, but speculators on the call side probably are looking for more upside up to that $80 a share level. What I'm seeing is $70 coming into play on even if they beat on earnings, but guiding forward, going forward into the holiday season, if they show any weakness there, we could see that stock trickle back down to that $70 level, and that's my expectation.
And is that your entry point into this stock? Because you traders are always watching for opportunity, potential dips on stocks.
Yeah.
I know has played out well for a lot of people. So
Right.
if it does come back below 70, would you be a buyer here?
I don't think I'd necessarily buy the stock. What I would probably do is sell some puts in there, pick a strike that's below the current share price, where I'm comfortable getting in, and that might be below that $70 strike. So it might be the 67.5, maybe the 65 strike. It depends on what comes out. But if they guide higher, they have a good report into the holiday season, which is definitely their number one season. We could see some more strength in there. So you got to play that one tight to the vest going into earnings.
Again, ahead of the curve, too. Already, we have traders on our show talking about what's going to be happening in November and December in the stocks to watch. So thanks for bringing that to us.
Yeah.
And also, just a quick mention, if you do sell puts, that's an indication that you're comfortable with the stock being put to you or owning that stock at a lower level around $67.
Right, you get to collect that premium, but then you're also owning the shares at that current strike price.
Okay, let's move on to another stock, completely different area. Bristol Myers.
Yeah.
What do you see in this stock? What's happening?
Yeah, it's pulled back from July highs 25% so far, and that's based on them failing in their cancer drug.
Right.
We didn't see any follow through on that. So we're seeing the stock pinned down to that $57 share level, and that's a big area of support. What I'm seeing is a lot of people are asking me, well, what do you do on a stock like that that's down 25%? They've got a lot of media coverage based on Mylan, a lot of the other pharmas, and what's going to happen going into the election with the presidential candidates. How are they going to kind of hammer this pharma sector? Valuation on Bristol Myers is really low right now. It's hitting a key support level, I said, at that $57 a share level. So what I'm looking at is selling puts down below that strike. So there's elevated volatility in that name based on all the news that's coming out in the sector. So option premium's high, so you can collect something there. And like you said, if I sell those puts down to 55, 52.5 strikes, maybe in October and December, I'm going to collect some premium, but also I'm willing to buy that stock in the low 50s.
Good to know. Thanks for coming on the show. Have a great trading day.
Thanks.